All right, everyone, we start off today talking about the stonks. Yes, the stock market, the Dow hitting 40,000 for the very first time. Yay for Bidenomics, say people that know absolutely nothing about the economy. It would be a little bit worrisome if the stock market weren't roaring ahead because you've been pumping the economy full of trillions of dollars of funny money. The problem is the actual value of those stocks, having risen, doesn't even keep pace with the pumping of the economy. That's a big problem. What happens is if you had $1,000, for example, of let's say Google stock or Microsoft stock, the stock price rises. So now that $1,000 that you did have in shares is now worth $2,000. Well, you've made money now, haven't you? But let's say during that same period, inflation has chipped away at the value of the dollar for most goods to the same tune, so that $2,000 is only buying $1,000 worth of actual physical objects. Well, then you haven't made money now, have you? On paper you have. You may pay a tax on these things, unrecognized gains and so forth. But no, you haven't made money. You broke even. Yeah, congrats to you, by the way. I mean, if you've managed to break even over the last couple of years of Bidenomics, then you're definitely making it in the world. I'm on the break-even level, where my income rose year over year, but it was basically at parity with the purchasing power's reduction. So it's like, well, I'm not losing ground. That's the good news, or not much of it. And so I can still, pay the bills and stuff, but everything's a lot more expensive. 5 years ago, the price of renting a house or an apartment was phantasmagorically lower than it is now. The price of building or buying a home was much lower. The price of food, the price of fuel, the price of pretty much everything under the sun was considerably lower. So even if you are making less money, there's parity involved. If your income rises but the purchasing power falls at the same rate, you've broken even. You have not actually increased your wealth, you've only increased your income. The same is true with the stock market. I would point out that unlike in some markets in the world, like let's look at China as an example. In the nation of China, a large proportion of all the stocks are held by the middle class. Pensions and so forth, they get dumped into the market. It's a very individual-centric system, for example. When times are good, this is really good, by the way, because you're benefiting the swath of the middle class, which is now several hundred million people in China. When times are bad, they feel the pinch more. In the United States, though, most stocks are held by a large number of conglomerates and very wealthy individuals, often tied in with the business world. So the Warren Buffetts and the Elon Musks of the world, the Bill Gates and so forth, they disproportionately hold that. So if the stock market does well, the rich do well. Does that trickle down to you or me? Most of us don't own any stocks. I have investments, but I don't have a stock portfolio. I might get one in the future. I'm looking at some significant income in the immediate future. I'm probably going to invest. I'd probably be more into commodities. Lithium would be a big one right now, I think. But lithium and aluminum, actually. Silicon mining. Gold. Gold's always good. I'd rather hold it physically if I'm going to invest in that. Same with silver. But it doesn't really trickle down to the average person. Biden taking a victory lap. Oh, come on, man, Bidenomics is working. It got the Dow up to 40,000 points. That's wonderful. It's good that the stocks aren't collapsing because that would be the sign of extremely bad times to come. But it doesn't mean anything for 99% of the population because they don't own those stocks. If the company's doing well and they work for the company, I'm sure that they're happy about that, but that's not exactly what's happening. The stock market's being artificially pumped by funny money, by watered down currency. You've got more currency representing the same or similar amounts of assets, and so the valuation of the actual dollar is lower. Therefore, the stock value rising doesn't really mean anything. It's meaningless. In fact, that rise over the same proportionate period of time, I don't even know if it's at parity with the devaluation of the actual currency that the stocks are delineated in. I don't think that it is. I think that technically speaking, the stock market has managed to lose value while soaring ahead. I would also note it was very funny when the Dow Jones and NASDAQ and shit were doing well under Donald Trump. Biden and all the others said, well, that's Wall Street, not Main Street. It don't mean nothing. It does kind of. If it's roaring ahead of the purchasing power, as it was under Trump generally, that's good. If it's roaring ahead because you're pumping the market, though, it means nothing. The rich are perfectly fine. When the currency is devalued, the actual physical assets that you've invested in don't necessarily lose that value. Their value increases on paper and achieves near parity, like if you have a yacht, properly maintained. A home. That's the primary investment, the primary asset that most people in the United States have is their house. Well, the house prices rise, and they're rising ahead of they're outpacing the inflation, generally, by far. Well, that's good if you're a homeowner, until you have to pay your property taxes, of course. That can sting. But that's it. That's the only non-depreciating asset, again, properly maintained, that they would have. Sometimes a mutual fund. That would be the second biggest for people in the upper middle class. Would be, they have a mutual fund, $100,000 in the mutual fund or something like that. Money gets invested by the firm, and then they get the interest. And again, the hope is to maintain wealth by shoveling it back in if you can. And again, then you get more interest, and you're hoping to outpace the devaluation of the dollar. You're hoping for a deflationary cycle, actually. That would be good. We haven't seen one of those since Donald Trump was president, actually. The Dow hitting 40,000 is good in the sense that it shows that the markets aren't outright collapsing. But it would be strange if it weren't roaring ahead, because you're pumping the economy. If you devalue the dollar, then necessarily the value of the actual tangible asset, like a stock, semi-tangible in that sense, is going to have to increase. And if it's not, then there's something desperately, desperately wrong. But it's not a sign of a healthy economy. It's like when Biden talks about joblessness. Yeah, unemployment's low. Now look at labor force participation. Now look at how many of the new jobs you're creating that are the transference of full to part-time. It's, by the way, most of them. It's the majority of new jobs being created. And anyway, it's not affecting unemployment because a lot of them are people taking out second side hustles anyway. With Biden attempting to destroy the gig economy by forcing the regulation of people that just want to work for themselves. They do the occasional DoorDash, or they do Uber once in a while, or something like that. A direct attack, by the way, on the upward mobility of the middle class. That's Bidenomics in a nutshell. Biden's like, well, I got plans to reduce prices. No, you don't. You have no plan whatsoever. If you did, you would have implemented it by now, I'm sure. Instead, he would simply like to berate companies for price gouging. Meanwhile, those same companies, their stock rose ahead, and Biden considers that a good thing. Oh, come on, man. I got Dow to 40,000. No, well, you know you didn't. If anything, the Dow would probably be higher right now in the absence of Bidenomics. It might actually outpace the devaluation of the dollar. And you certainly wouldn't have as much inflation. You'd still have a bump in it if Trump were reelected in 2020. There would still be a bump in inflation due to his own spending. That bump ended a long time ago. We're looking at Bidenomics at this point, years on. And there are still people that pretend that it's Orange Man's fault. Biden says, well, come on, man, we inherited 9% inflation. No. Inflation at 9% a year and a half into your tenure as president. That's not Donald Trump's responsibility at that point. Inflation does lag. It doesn't necessarily lag that much. If it did, then I would expect a huge surge in inflation sometime this year based on your freewheeling infrastructure bill. Well, somehow, supposedly, it's cooling. It's gone linear now. How wonderful. So has the Dow. It's at most pacing the inflation rate. Now, you had $50,000 in stock. Now you've got $60,000 worth. But over that same period, that additional $10,000 has been chipped away at due to inflation. The number of pickles and leeks that you can buy with that actual stock, if you liquidate it, and then you pay your tax, of course, which means you've lost money probably, is less than it was before. The government is siphoning up our money like a sponge, devaluing the currency, and wrecking the markets. It doesn't matter if the Dow Jones roars ahead. It doesn't matter if NASDAQ rises. I'm very glad for all those stockholders, which generally are, they're business class flyers, and they wear suits to work. That's wonderful. And if it's some doctor, some working rich person, a doctor, a lawyer or something, they have a stock portfolio, I'm glad that you're doing well. That's perfectly great. You're a productive member of society. Most of them are just money changers. All they do is they play off assets against one another and try to make out like bandits, getting richer and richer over time, pacing far ahead of the actual devaluation of the currency and the watering down of the numeric assets that they have. They're doing fine. It's great for the 1%. For the rest of us, it is absolutely meaningless. Does this news affect my income? No. Other than I can make a video about it and get some ad revenue on the Rumble upload. Other than that, you can forget about it. It doesn't mean anything to me because I'm not invested in the Dow Jones. That's about all. Peace out.